Okay, folks, welcome to Market Wrap for the 26th. Okay, so, the price action today is kind of consistent with a market that I had hoped to have seen on Friday, where the Federal Reserve Chairman came out and he was very, very optimistic, very, very grandiose, very, very willing to take credit for beating the inflation demon, but was at the same time extremely, extremely dovish, wanting to cut rates. He made it crystal clear that's what was going to happen. The problem is that the more I thought about it, the more I realized that he wasn't bragging. He was afraid. And he needed to send a message out to the market. Now, I've been saying that with the nearly million share reduction in jobs created in the past year, that he's probably behind the curve. If in fact he was not colluding with the BLS, the Bureau of Labor and Statistics, and he was unaware of the fact that the numbers are being overstated. He probably has his own economists in the Fed, and perhaps they had the better knowledge of the true state of the jobs market better than the BLS did, or at least more accurate than what they were willing to report. So the question is, are they behind the curve? And when you take a look at the probabilities of a quarter basis point cut, this jumped up dramatically today. I think this is at 63% going into the day. Now it's nearly 70% probability of only a quarter basis point cut. That means that 1/4 basis point cut will not hit the economy for 6 months. To me, that sets the stage for the Federal Reserve not just cutting once in one meeting, probably weeks after, since the markets will not be happy with just a quarter basis point cut if the jobs data continues to deteriorate. And now add to the fact that you have oil spiking. What does that mean for the inflation data? Now, obviously, one trading day in oil does not mean much. It is a spike based upon concerns out of the Middle East. Maybe they'll go away. Maybe they won't go away. Let's get to the charts. Bullish percent index, frothy. Very, very frothy now. Closing up today, despite the fact that the Qs took it on the chin. Dow did close up. TLT, 20-year bond ETF, struggling here. Potential double top. By now, you would have thought there might have been some follow through, which we have not gotten yet. Volume was light. Yields. Now, the reason why I'm a little bit bearish on bond prices is not so much the chart of the bond price. It's more the chart of the 10-year yield, which is obviously a different note, but highly correlated to the 10-year bond. And you can see that we have a possible